Hello everyone. Hello everyone once again. This is Beable King and it's a lovely sunny Sunday here in Lagos, Nigeria. Today I'm going to be running a review of what I'm expecting this week on gold, British pounds, US dollar, and euro US dollar. Okay. So if you did not watch my previous video on my analysis for the month of June, please, it will be available somewhere on the screen. Click on it, go and watch it first before we continue. All right, welcome back. In the video, I mentioned that throughout the whole month of June, I'm expecting both all my pairs, which is XAUUSD, GBPUSD, and EURUSD to be bullish. And I gave some reasons, okay? So on the daily time frame, we can see that the price broke here. Here we had a range, all right? The market broke above, bounced on it, and did what moved up to the next key level and did what came down, then has moved up 3 times and came here, and we can see a nice rejection here, maintaining this upward trend line, okay? So this week, what I'm expecting is quite simple. On the lower time frame, I can see that the price came down. And the reason why I'm expecting that this price is going to move up is because we have what we call a divergence. This is a divergence here. In as much as the price was pushing lower, the pressure is actually no longer there. And what happened? The price moved upwards. So right now, the kind of setup I'm expecting in the market is an inverse head and shoulder pattern. So we have something like this down here. We have this here now. So right now, I'm expecting that the price may reject somewhere around here, pull up here, and then push all the way up to this point. Now, the reason why I'm looking at this point is because I've measured the distance from the head to the neckline, and I've applied it from the neckline to mark where my expected profit will be. Meaning that I'm expecting gold to move from somewhere around 1942, 1943 to 2031 ounce per gold. If I'm going to measure that, that is roughly about 800, 850 pips. So I'm expecting the market to do this. What happened was the market dropped on Friday. And right now, what I'm waiting for is a confirmation that the market will move up. Okay. Now, in this move, I'm not expecting that the market is just going to move directly all the way to the top here. I'm anticipating that the price will probably pull up here once, pull back, then pull out here, pull back, and then move up this way. Now, you may be wondering, why am I anticipating this kind of move for gold? It's quite simple, and I will show you something that would make you say, wow. We've always heard that the market does not repeat itself, but human beings are repetitive creatures, which means that we tend to create a pattern and form habit of it, which is the reason why Forex is different from gambling, because they are repetitive pattern that if you repeat it, you would be profitable and consistent in the market. Okay, fantastic. So this is the monthly time frame. Now look at this right here. The market from here dropped down here, gave a 1, 2, 3, 4, 5, then drop, then came up here, gave us the lowest low here. You can see this low is lower than everything else. Tapped here, and then did what? Move upwards. Okay. Now let me remove this and use lines to mark it. So you can see that the market came to the lowest point here. Why am I showing you this? The market had a range here. 1, 2, 3, 4, 5, pull up once more before the drop, right? Now, after that, if you notice, of all the pull-ups here, this is the lowest point it got to. So the market came all the way to this point, dropped down here, pulled up to this point again, rejected it, At this point of rejection, it's maintained this previous low. Okay. And after that, what happened? The market broke out, ringed here a bit. Sorry. The market broke out, ringed here a bit, which was the pullback I mentioned, and then moved upwards. So right now, if you check the 4-hour chart, we had the range by this side, we had the drop, we had the pullback to the stop. Now the price is currently somewhere around here on the 4-hour time frame. So I'm expecting a move like this. All I'm waiting for here is a confirmation. As you can see here, we have a bullish confirmation before the market started moving up. So if we go back to the 4-hour time frame, you can see the range right here. 1, 2, 3, 4, and even that small pullback that we saw before the drop. Now the market has pulled up. It has dropped now. What I'm waiting for here is a bullish candlestick pattern that will confirm that the price is about to move up. If it pulls up to this point and I see a rejection, I would close. Then look for a sell down to this point. And from here, I'll be looking for a buy all the way to this point, while I can add additional entries somewhere around here. So basically, this is what I'm expecting, possibly between now and the end of June. And that's the reason why in my video, I mentioned that for me, the best trade for me out of my 3 pairs would be gold. So I'm looking for a move like this. So right now, if I see a bullish confirmation here, I will be buying to 1980. If I see a rejection here, I may not sell because it's a counter trend trade in anticipation that I'm expecting the market to rise. So I wouldn't want to sell a counter trend because gold can also as well move all the way to the top. But if I see a rejection, I may sell down to the bottom, or I just leave the trade and wait to take entries at this bottom for the new high. So this is my expectation on gold. Let's see what the market would do. Now we're back to British pounds, American dollar. And I did mention here that we had a rejection here, resistance, we had a resistance here, and the market came down. And after that, we had a range showing that the market is no longer willing to go down before the market took off on the daily time frame. But after that, what happened? The price fell down, and without coming low into this range, if you notice, this is the supply zone. The market closed below it, but didn't create a new low. Rather, the market picked up and came out of it, and now it's about to retest it. So in this case, I'm looking for a situation where the market may, from here, start moving upwards. But the first point of interest for me would be this high. All right, it needs to break this high. Then after it breaks this high, maybe pull back and then continue the move to the north. Okay, so this is my expectation on British pounds on the daily time frame. If you know what the video, please click on the link to watch the video. Now on the 4-hour time frame, we had equal lows here, whereas the market was creating new lows here. So this is another form of divergence. Now, divergence is a price action indicator. It's not an indicator. It's a kind of setup that you see which informs you that the market is about to change direction or change its trend. That's what it simply stands for. So when you see a divergence, you know, oh, the market is about to change direction. So we had the market coming down, coming down, coming down, coming down. And guess what happened? The market was indicating that there is no more pressure to continue going down. Rather, what happened? The market now started picking up. At this point, this trend line was broken, but a new high was not created, as you can see right here. This trend line was broken, it was retested, and after it was retested, what happened? The market now created a new high. This new high is the confirmation that the trend has been changed. I'm going to work on a video to explain how to trade price action. So right here, you can see that the trend is downwards. That a trend line is broken does not indicate that the trend has changed because it has not created a new high. But if the trend line is broken, here the resistance was broken, it was turned to support, and now we have a new high. Because we have a new high, we now know that, okay, the market is about to start moving upwards. Right here, what am I expecting? I'm expecting a possibility that this price could pull down towards this area of interest, somewhere around here. And then from here, the market will do what? Start moving upwards. If you ask me, what should you do? I would say that you should wait to see the price around 1.2423 or 1.2395. Within this zone, if you see a reversal candlestick pattern, if you don't know about candlestick pattern, please go and read up on it. If you see a reversal candlestick pattern, then you can take your buy. I would encourage you to sell from here because the drop was all the way from the top here and it came down here. So look for a buy from here to the upper side and let's see how the market moves, okay? And finally, for Euro USD, we can see here the market came here, ranged a bit on the daily time frame, dropped, came to retest this point where the rejection was, dropped, broke above it, tested it as support, then moved up. After I did that, the price came down here, tested it the first time, bounced back, came down below it. But in as much as it came down below it, you can see that there is a bullish confirmation that the price is not willing to go down. And we had a pullback on Friday. Now, the reason why this line is here is to make us understand that this market as well may also pull up. So if you watch my videos from May, I mentioned that it is possible that this price could pull up to this point area and then fall, or it is possible for the price to fall to this area and then rise, okay? But because it's in the middle of a range market, we have high, we have low, we have high, we have equal low, we have equal high. It is a dicey trade at the moment. This line is no longer valid, so I'm going to delete it because it has been broken. So we have a range market here. Right now, I won't really be looking for trades around here. I would prefer to see the market break out above or break out below before I take a trade. What am I talking about? So I'll be looking for the market to break above here, bounce here. Then from here, this is where I'll be looking for my buy, okay? This is where I'll be looking for my buy here, okay? If I'm looking for a sell, I'd rather wait for the market to break below, pull back up, then give me a confirmation somewhere around here. Give me a confirmation somewhere around here to sell. So that's for me, it's a better setup. On GU, we have the price somewhere around here, which is the reason why I'm looking for a buy on GU. Okay. So on the lower time frame, hold on, let me delete all these new lines I've drawn to explain what I'm talking about. Now on the lower time frame here, what can we see? We saw that the market was coming down and we had a divergence, which was the reason why I told my clients and my FX friends that we're expecting the market to move up. And as you can see, we had the market come here, low, range, and then give us a new low. So this was the last high. The market has broken this trend line. Aside from breaking this trend line, it has created a higher high. So what am I expecting? I'm expecting that on a shorter time frame, that this price may move upwards from here. But how far it's going to move is dependent on where I see the reversal candlestick on the 4-hour time frame. Okay. Now, people would also ask me, okay, so where are you expected to put your take profits? Okay. How I place my take profit is once I get the candlestick confirmation that the price is about to reject that point, All I simply do is I apply my Fibonacci on it to know exactly where the market is rejecting from. So for example, let's say we get a nice rejection here with say a bullish engulfing candlestick. I can conveniently tell my clients to take a buy from here and set their take profit somewhere around here. Applying the long, say we take a buy from here. We have our confirmation and we take a buy. Our take profit will be somewhere around here, while the stop loss would be somewhere around here. Okay. So if I take this out, here you can see that I'll be risking 45 pips to say make 213 pips on this trade. So this is what I'm expecting the market to do. But I need a candlestick confirmation before I take such trades. So stick around, share your comments, share your observations on the Telegram. For you to share your comment and observation, all you simply need to do is search for me on Telegram at Bearbull FX and make your comments. You can also make your comments below on this channel and I would be able to respond to them appropriately. So these are the things I'm looking for. I'm looking for a buy on EU. On gold as well, I'm also looking for a buy. Let me take this off. If we get a rejection somewhere around here, where the price is at the moment, applying my Fibonacci from this bottom here to this point. This is the optimal entry point. This is OTA 70.5 fib level. If we get a reversal, say somewhere around here, I would be looking for a profit. My first profit will be somewhere around here. My stop loss would be somewhere around here. Based on the candlestick setup, would be somewhere around here. So I'll be looking for a profit all the way to this point first. But if the market should break this point, then I could expect the market to move all the way to 2003, okay, from this point. But I need the candlestick confirmation before I'll be able to take this trade, okay? So that's that for that. And for GU, I'm looking for the market to come down to this level. This is the swing high. This is the swing high, this is the swing low. So if I apply my Fibonacci from this point to this high, all right, so I'm looking for somewhere around here. So I could be anticipating a bullish move, say from here to this top side. And my stop loss would be somewhere around here. Okay, so I take the Fibonacci off so that I'll be clear. So I'm expecting a move like this, that the market will move all the way from here to here. Now, observe that it's almost the same high. Almost the same high. So I can just target this high once the market starts moving from here. Okay. So that's where I'm going to stop for this week. I hope you're profitable. I pray that you're profitable as we begin the month of June. And I pray that the markets will definitely favor us. Amen. I also make some podcasts as well. You could check me up on Spotify and you could follow me on Telegram at BearbullFX or chat me up on Telegram at BearbullFX. I'd share my free signal with you, signal channel with you there, where you could take advantage of the markets and see you next week. Bye-bye.